Constructing your life is about much more than just building a bank account. Each week, join real estate entrepreneur and mindset coach Austin Linney as he interviews guests who are constructing their dream lives and impacting the world around them on a daily basis. If you're an entrepreneur or wanting to start a business, or you just want to hear motivating stories of how others have overcome the odds, you are in the right place. And now for your host, Austin Linney.
Guys, welcome back to Construct Your Life. Guys, the first time, second guest of the podcast. He didn't know that until I just told him. Mr. Jake, the Rain Man Harris, developer to the stars, developer to your heart. How you doing, my brother?
I am fantastic, Austin. That's awesome to hear that I'm the first two-time guest on here, and man, I'm humbled that I get to be that, and also that it's to promote something that's near and dear to my heart. Blood, sweat, and tears taken away from time and doing real estate projects.
I love it. So you have a book coming out. This will be released 3 days before the book comes out. That's why I wanted to highlight this. We're also going to talk about just development and projects. You're doing so many things with your fund in the investment space, flipping houses, developing deals and all that stuff. So anybody that haven't listened to that episode, Jay kind of tells his story. So you can kind of revert that to a longer thing. But if you want to share like maybe 1 or 2, 3 minutes who you are, and then we'll go from there.
Yeah. So, I guess I can kind of, take you the 10-cent version of my background is, I was in the Army. Somebody gave me a book while I was in the Army. They said, "Hey, Sarge, you should read this book." And it happened to be this purple and yellow covered book. It was called Rich Dad, Poor Dad. To me, that created a light bulb kind of moment where it was like, this is what I want to do. And so, going through that, I ended up getting into commercial real estate as far as from being a contractor first. I was working for Equity Office Properties, fixing up office buildings, which is Sam Zell's, entity REIT at the time, who's known as the Grave Dancer, who happens to be, a real big distressed and one of the most famous distressed investors in the space. I've now seen like where some of these correlations have created, parallels in my own life as far as being a distressed investor and a contrarian investor. I started flipping houses in the early 2000s. I rode that subprime wave up. And then, really the start of this book is me sitting on a street curb outside of a house in Tucson, Arizona, crying about the fact that everything I'd built has turned actually not even to zero, to negative net worth. And I'm saying a prayer is, "Dear Lord, can I be worth no money? Can I just go back to zero? Like that would be super awesome to start over at zero, because I'm now negative." And so that led to now this journey into distressed investing. And so the flip side of that coin is I started investing, a year or less than a year after losing everything and going negative. And it was now diving into that and building out scale in this distressed real estate space allowed me to build back better, to build a better foundation into the moving forward. And why I believe specifically distressed investing is the best way for people to get into real estate, because it allows you the most room for error. You can still screw up and sometimes double your money. Like you did everything wrong and you still made money, as opposed to investing into frothy markets where if all the stars don't align, your deal is bust. So that's the quick 10-cent version of what leads into this to this book. For those, I know there's probably going to be something, Catching Knives, a guide to investing into distressed commercial real estate.
And the bigger issue is, and this is a juicy question for Jake, I think the term distressed property, people actually don't have a definition, because I think their thought process is a poverty-stricken like place. So like the actual definition of a distressed property might not be exactly what somebody, am I saying this correctly? Maybe a developer is distressed in where he is with his business, and you're picking up an opportunity cost where he can't clean up his own mess, right? Like the term distressed property means many different things.
Yeah, and that's absolutely true. So there's, macro things. Hey, we're in a pandemic right now that's kind of hopefully tailing off. There's macro events that can cause widespread distress, a disconnect from the intrinsic value. But there's also micro events that, Detroit closing down the auto industry, changing the demographics and the market overall. That specific developer can come into distress. People having bad situations in their life, a divorce, a medical condition, so distress is happening all the time. Even in those good economies, obviously what the book and this focus is when some of these macro events are happening, because there's a widespread amount of deals available. And it also feels really wrong to be doing and investing in that, because everybody's kind of getting their alligator arms. They get nervous because everyone else is battening down the hatches, so to speak. 2020, everybody kind of got like, we don't know what's going on. We shouldn't be buying anything. That's where obviously, but the fundamentals of distress investing, whether it's macro, whether it's a local, whether it's an individual deal, still all makes sense. And so that's why I kind of want to give this as a guidebook is, this is how I look at deals. This is, using my experiences of going to trustee sales, where you have missing information, how do you structure a deal? How do you figure out these things? And then also like, who are some of the key people on your team? Like, you don't have to do it all. That's a big misconception, is that you have to be the smartest person or do the most things or be a generalist. And the reality is real estate investing is a team sport. And, where are your strengths? Identify kind of those core things that are your strengths, and then fill out the rest of your team or create, deals that, collectively bring that team and rise the tide of the overall, process. And that then floats all boats.
So walk us through kind of, you don't have to go chapter per chapter, but basically the basic framework that you suggest investors, let's say somebody new into it or looking to ramp up their model. What is the basic framework to the opportunities that you're seeing when you're investing in distressed assets? So
the big thing that I start with, and actually it's early on in the book about this, is, obviously I think people, listening to your podcast understand this. You're trying to create some financial freedom. You're constructing your life. What I really start with the end in mind. Where do you want to go? Where does that, and financial freedom means something different to everybody. If you can help identify your personal why, that is going to also help you filter out, because when there's deals abundant, what happens is you have people chasing every shiny object and then they don't do anything. And so you need to first figure out, yourself a little bit. And so I didn't go into detail on this, but specifically, like, what is your dream life? What would you do? And an example I use is that somebody said, hey, I want to make $2 million a year. Told their coach, I want to make $2 million a year. And the coach says, that's awesome. Now, why? Why do you want to make $2 million a year? And you were like, well, because it sounds like a lot of money. Dude. And you're like, it was like, literally, that was it. It sounds like a lot of money.
I had a coaching client yesterday tell me, I need to make $3 million before I'm 30. And that's 3 years from now. And I said, why? And he goes, because it sounds good. And I said, that's the most arbitrary number I've ever heard in my life. No, it matters. And I was like, no, it doesn't matter.
So, and that's part of the thing is like, cause it sounds like a lot of money to make $2 million a year. And I was like, and so, okay, now what happens is what many people don't do is figure out that why that's your client wants to make $3 million. Why does he want to make $2 million a year other than, and not to say there's anything wrong with arbitrarily picking a dot and say, I want $2 million a year. But what happens is you can actually reverse engineer that. And so it said, start writing out all of the things that your dream life would actually happen. And so you'd be like, I live in Italy 3 months out of the year. And it might be, I own a villa in Italy. I own a place in, Colombia. I have an airplane. I have a Ferrari. I, have, six-pack abs and, amazing health. Awesome. So now if you break down all of those things, you can also start putting values to those. And the reality is like, you might not need to own that villa in Italy. You may just say 20 grand a month would cover any place that I want to stay. And I want to stay for 3 months. So I need to make $60,000 a year just to cover my travel expenses to wherever that is. I can stay at the 5-star, the Ritz in Rome for 6 months or 3 months based on that $60,000. So then what happened is this person, they went through and they're like, actually, I need to make $650,000 a year to afford my dream life, which, hey, to a lot of people, that's a lot of money. But to him, he was almost there. Like he was already making like $500,000 a year. And so it was just like, oh my gosh, I'm almost at my dream life. And so what it does is it helps change the perspective of what type of deals you're going to be doing. He was getting ready to hunker down for like a next 10 years of go all in, be away from his family, take on more, say yes to more, potential business deals, do these other things, like grind it out so that he could go hit 2 million. But the reality is to hit his dream life, he only needs 650,000 and he was almost there. And so when I say that is start with the exit. Now, first you can define like who you are, what you want, as far as that's going to help define what your why is. And then it allows you to also then start getting into an exit of a particular project. There's deals. There was an opportunity years ago that I had to run the property management for a big single family rental portfolio. Hey, property management and the maintenance, maintaining these houses is a cumbersome kind of thing. We have 2,000 houses from here to Reno. This is going to be it. You start penciling out the numbers, but then it's like, cool, make $1 million a year doing these things. The reality is like every time I sat down and went through that, I hated the business model. Like it just sounds so painful to me. Like the logistics, the coordination, like it wasn't who I was. And even though it was going to be a big number as far as making, I was like, and after a while, I was like, I'm out. I'm done. Like this is not who I am. I'm not going to ultimately be able to pursue this and with the intention in which I knew. So it's a no for me. And so I start that again, starting with the end is you need to figure out what your exit plan is first to an individual property, because you're going to have to underwrite to that. And that's going to allow you to say no to a lot of deals faster. You may be super fired up about retail property, or you may hate it, and that's part of the thing is like figure out what aligns with who you are as a person first. And then you go, I can understand and get to be passionate about this. And then if you're pouring into that, that means you're eliminating everything else, and you can get really, really specific on what it is that you're looking for. And then you can dive into the other details of finding what a property's worth, or how you're going to buy it, or how you're going to structure. But if you don't even know what you're looking for yet, it's that whole Alice in Wonderland, which way do you, how do I get there? And be like, well, which way do you want to go? If you be like, I don't know where I want to go, then it doesn't matter which direction. It's so you have to first pinpoint. And even if that is $3 million and that's the trajectory we want to go, fine, so be it. But if you can start peeling that back and say, maybe you don't need that. And do you want to do 10 properties that make you, $1,000 each? Or do you want to do one property that makes you 10,000? Those things are also going to change out and be like, it's the same amount of work. So to help you define that and then understand it. And that's where I think from the starting process and these mechanisms that I've kind of talked through really make sense almost in every single asset class. But there's certain nuanced things to distress that can also get you in trouble, but also give you the most wiggle room or room for error when you're investing in distressed.
My coaching client sent me his goals yesterday, and he said, I want 50 Airbnbs. And I was like, no, you don't. And I was like, no, you don't. And I was like, if you send that to me again, I'll tell you, no, you don't again. And I'm like, talk to somebody, talk to all the people that have been out there. No, what you want is you want to create the space necessary, the net, the gross to net margin on 6 or 7 properties that aren't going to need your time and attention, that are of the caliber that you're looking for to create the lifestyle, opposed to running around with your chicken with your head cut off and making $300, $400 a property. It doesn't do anything for you because you think that scale provides the number, when ultimately you're looking for the net bottom line is really what you're searching for.
Yeah. And that's, I think one of the things is it's either you have to say no to more people or to know more things, or you need to build scale within systems. And that's the other thing is there's a system in which I kind of talked through this, is having these plans in place allow you to put together a system that to leverage other people. Because like you said, managing 50 Airbnbs is like somebody that has a special, place of torture that they enjoy. Like I was like, to me, that sounds like the worst. You'll be like, I would rather own a shopping center that is super risky, but takes no work, that gives me the same return as managing 50 Airbnbs that's going to, have me running ragged, all hours of the night, every day. But there are certain people that do want that. How do you put a system in place? How do you get there? Well, you're going to have to put people in. Mm-hmm. So either it's saying, no, I don't want 50. I only want 7 that really, really work. Or you can leverage people and be like, yeah, you can have 50. You can have 1,000 of those if you have the right systems and the right people in place.
100%. And I love that you start the book there, because that's ultimately what I've seen the biggest bugaboo and kind of what trips people up is they don't start there. They're worried about the investing and let's do that. And that's great. But like, how we say down here in Texas, it's kind of like pissing in the wind. If you don't really know where you're going, I don't really know what you're doing, And so what are the next aspects that you're focused on kind of pushing in the framework of the book to kind of this type of investing?
So, I mean, one of them is obviously this book is I've been doing professional investing for 20 years. I've made a lot of mistakes. I'm still making mistakes as far as, they get to be, a little bit less and less and, less likelihood to be fatal. And so I've tried to condense that 20 years of experience into some lessons that I've learned that help people kind of avoid some of those pitfalls. I think one of the things is, I think it was something, and it was like, I'm going to mess up on the quote, but it was like, basically wisdom is learning from other people's mistakes and not doing it yourselves, as far as maybe that's a little bit stubborn, or I had to go out and make some of the mistakes myself. Like I had to go, the oven's hot. And I was like, yeah, really? Psst, oh yeah, it is hot. Damn. And it's like, but if someone tells you the oven's hot and then you go, cool, I don't need to go touch that. You don't have to go experience those pains. I think in real estate, there's some things that I've learned. And now that I've opened my mind, opened the aperture on that, is there's a lot of value that other people have gone before me. They've already invented the wheel. And how can I, one, gather that wisdom, but how can I share that to other people? And I'm not saying I'm a 10 out of 10 on investing into real estate, but maybe I'm a 7, but am I helping other people and they might be a 6 or a 5? And so I'm just maybe a few steps ahead of them and helping them get to these additional levels. So then your question was, what else am I doing? This is a starting point for me. I believe this is a book, but it's not a textbook. I didn't want it to be into the nitty gritty detail, getting into every glossary term of commercial real estate, because there's so many facets in which you can take that up, down, or sideways. So we're actually working on a masterclass series for people that want to dive in to be much more specific. So how do I underwrite a, office building or a retail shopping center? The technical terms, the way that you evaluate stuff is going to be different for every single asset type, every part of the market. And so it allows me to go a little bit more in detail on some of those. And what I'm finding right now, it's like the people that have started to have some success in residential real estate. Hey, I figured out how to flip some houses. I figured out how to make some money. Now I'm making a couple $100,000 a year. Or it is like a high net worth individual, like, hey, I'm Dr. So-and-so, that it's like, I don't want to jump into flipping a house or dealing with a rental and have somebody with, a leaky toilet call me up. I'd rather just go a little bit higher level and get into, move the comma over 1 or 2 spaces, because the reality, like you said, it's the same amount of work to do, 7 deals. Well, guess what? It's the same amount of work to do 7 Airbnbs as it is to do a hotel. Mm-hmm. It's the same amount of work to do, a few rentals as it is to an apartment complex. But no, people don't know how to connect to those bigger deals. And so maybe I can give them a little bit of insight on how to go play bigger, faster.
I'm not saying it's good or bad or indifferent, and I hope my old boss is not listening. But when I worked private equity, it was like, you need to go chase down some $100,000 flip loans, 200,000. I was like, no. I'm going to go chase down $10 million development deals, because that's just going to be just as much work as that flip deal. And to be honest with you, that $100,000 flipper is going to be more trouble than a 10 million, because the ducks aren't in the row. And so, there is an element to a stepping stone of a real estate investing career that I think you need to respect. You need to earn the next level over and over again. But once you start playing in those deeper waters, once you start getting in that deeper pool, you realize that you can surround yourself by other people. What I don't understand, and I've been studying the last 60 days behavioral investing, like the psychology of money and stuff like that. That's what I've been studying. And what I've realized is they basically said, like, you're not fucking special. Like, I think in my 20s, my ego wrote a lot of checks that my butt couldn't cash. And I think I just got off the phone with a big entrepreneur on the podcast. I've removed my level of importance to the show, meaning, like, I'd rather surround myself with people like you, great people that I partner up with that can handle the civil engineered aspects of development, which I want nothing to do with, and just let me go do what I do, which is relationship and sales. And so it takes a lot of inner work. It takes a lot of development and reading to understand that ultimately your need to be in control of everything is strangleholding your business. And understanding that Jake Harris, might be leading the fund in the development, but he is really lifted up by the empowerment of the great people around him. And when you can get to that point, you highlight that person in the best version of themselves, and that makes the team better overall.
Yeah. And that's, I'm the worst person to probably do most things within the business because I get distracted. And that's why I have people here that handle the accounting, making sure processing bills, putting them through that are getting paid in the right time, the right place. I don't even I can't even write checks. One, they've removed those things from me, not because, but because they're more efficient at it because they're doing it every single day. So I have to come in and say, hey, here's a bill. How do I pay this? Or here, and I just forward it on to them. And so it's I don't pay the bills. I don't know how to do that. I don't even know where to get the checks. I don't know the right program to the right thing to print, but I have people to handle those because that's not my skill set. And so it is that process. And that's what we kind of dive into is also, and I kind of talked a little bit about that teamwork concept is you don't have to do everything within real estate. I've been doing this for 20 years. I went out and got a master's degree in real estate and finance. I have a broker's license. I've done hundreds of millions of dollars of deals and transactions across 26 states. And I feel like I'm just learning more stuff every single day today than I was 20 years ago. And so because there's so much diversity in this space and like you said, getting out of your own way, removing some of that ego, doing that internal work. And why I put that in the beginning of kind of that book is when you do that, it allows you to understand how do you fit in that role. And the reality is I think the opposite of what you just said is I think everyone is special.
Yeah.
Everyone has an amazing gift that brings into this world. But it's figuring out what is that blessing? What is that gift? What are you innately gifted into this world that, is, nobody else possesses or gives outweigh results to that. And that's a discovery process. And I don't think we all even figure out some of those things until later in life, or sometimes people naturally fall into that. You listen to it and then it got oppressed out of you in school and, beat out of you or into a job. Maybe they gave you a salary to oppress what you really, really loved. And it was enough to make the bills to pay the monthly. And so you just gave up on your dream. I don't know. But I think that the more you tap into that is figuring out yourself, it more opens up the possibilities of what you can do in this world. And then I know that we've talked about this before is everything is a construction of your imagination. Everything that exists is someone's imagination that became a reality. The building that I'm sitting, the artwork behind me, someone thought about that and then went and did it first. The sooner that you realize that you can use your mind to create your reality, that's the key to all of this.
80% of what we do, if not 90% of what we do is acted and used upon by your subconscious mind. And your subconscious mind does not know the difference between reality and real. So you might as well imagine a great life for yourself and then go out and live it, as far as I'm concerned. And the studying that I've done on the mind and how it works, that's what I've understood. Now, I might open Pandora's box with this question, but I can't get you out of here without asking you. You know where I live. I don't know what the hell's going on here in Austin, Texas, but that's for another day. But, what I'm seeing right now is the only thing that I can relate to is panic buying. I don't even know, to be honest with you, $200K over asking, waive appraisals, that'll all come out in the wash somewhere. There's not foreclosures. I'd love to just give your 30,000 view on where you see us heading in the fall and the summer and moving into next year, kind of just your take, not what you think is going to happen, just the Jake Harris point of view.
Yeah. So I've spent a fair amount of time thinking about this, contemplating, looking at this. So there are going to be some levels of distress and some asset types in some locations. I also think it is very much queuing up to be the roaring 20s again, 100 years later, as far as the government. And so here's a statistic, 1/3 of all the US dollars ever in the existence of forever were printed in the last 12 months. So 1/3 of all the US dollars ever were created in the last 12 months. So there's some arguments that, to me, like that triggers inflation. You print a bunch of money, asset prices all go up. Your loaf of bread is $3, now it's $10. Your pizza is $20, now it's $50. But there's some debate that every central bank in the world is doing that too at the same pace and veracity. And so that causes deflationary pressures. Again, this starts getting into super high levels of modern monetary policy and theory, and getting into that. Again, there's so many variables of levers that people are pulling right now. I believe that the Fed is reactionary instead of proactive. So what they're trying to do is they're trying to print a whole bunch of money, and they're telling people that inflation's coming and they're okay with that. To me, that tells everyone that doesn't own solid assets, we're coming to take money from you through inflation. And so it also clues into you need to start being into solid assets, that especially something that produces cash flow that to covers that and trades at those opportunities, or that rides up inflation. Mm-hmm. And so people buying 200,000 over list price, waiving contingents, doing things like that. I actually don't think that causes any kind of issues. I think that there's from my studies, that there's 4.5 million residential unit shortage in the United States right now. Interest rates actually dropped down 150 bips over the last course of the year. I think we're triggering into a low interest rate environment for a longer period of time, similar to kind of what Japan has done for the last 2 decades, 3 decades. Once they started inflating the yen's value, they have to create a low inflationary environment. So I believe that we're seeing something like that materialize in the United States. So that means borrow money that's on the cheap, that's fake being printed, buy into solid cash, producing assets, or assets that go up with inflationary numbers. And then if you look at that residential units being short 4.5 million, units in the United States, it is not evenly dispersed across the country. And so specifically to Austin is Austin, Dallas, San Antonio, Boise, Salt Lake. Some of these markets is the West Coast is doing a fantastic job of driving people out of the West Coast. They're increasing taxes. They're coming after your personal freedoms. They're making it, more of a pain in the ass to own a business, to go out and enjoy the beaches, to do anything. And so what happens is everyone's moving a metro over. So the West Coast is now moving to Boise, Salt Lake, Phoenix, and Central Texas. You have Northeast moving down to Miami, to Charlotte, to Raleigh, to North Carolina, South Carolina, and so you have a real migration of population. And so when I say there's 4.5 million units shortage, well, guess what? They're heavily concentrated in markets like Boise, Salt Lake, Austin, Dallas, San Antonio, Jacksonville, Tampa, St. Pete's, Raleigh, Nashville. And those markets are going to see an increase in valuations on a couple of different reasons. Because as I also believe we're in an inflationary environment, cost of construction is going to go up too. Mm-hmm. If you wait 2 years or 3 years to go down the road, guess what? We're seeing it even right now. Lumber costs are through the roof. Part of that is the supply chain disruption. But as commodities react to these inflationary things, the cost of building anything is also going to go up. Your land value may have gone up in over the next few years, but if you're not locking in development prices today, if you're not locking in some of those opportunities, then what happens is you're just treading water from your development or redevelopment costs. Now, again, obviously the topic is distress. I believe there's going to be distress that comes out later this year as the PPP money round 1 and round 2 is now finally running out. Forbearance on some of the loans, and they kick the can down the road, call it a year, 2 years, and you got to pay the piper. CMBS is going to probably be the place that you start seeing it the earliest. But I thought it was going to happen early this year. They've extended that out. And where we're really seeing is there's an 80% reduction in commercial real estate volume overall across the country. Mm-hmm. Mm-hmm. Shopping centers aren't selling, hotels aren't selling, a handful of apartments are actually trading, but office buildings are down. And so your volume's down by 80%. So that what it means is there's a whole lot of dry powder sitting out there waiting for this distress, both on both the debt and equity side. So everybody's getting a chance to look at every single deal that comes in on the market. That's why you're getting 20 offers in on stuff. You're getting multiple offers from the debt. Who's willing to take the lowest rate? And so what happened is we haven't seen any real distress into the market yet from a macro level until there gets a little bit of opening up the floodgates. And maybe this delays out and there's not the wave of distress that everybody thought was going to be happening. Maybe that pushes off because it trickles out a little bit more. But the amount that I believe of businesses that aren't going to be able to sustain some of these, loans that are not going to be able to be serviced and or refinanced are going to cause some issues. And I think there's going to be some opportunities to pick up some distress at some point later in 2021, but it's not going to be in residential, I believe.
And guys, that's why we call him the Rain Man. I just took notes too to send out to my business partners from that conversation. If you didn't hear all that, you need to rewind it. You need to listen to it about 5 different times over because that was a masterclass. I just sent it to them and I'm like, this is where we need to be focused. The Harris has spoken, so this is what we're working on. Because we're about to build our first house in the coming months, or probably the next 2 months. So kind of taking a little from what I saw one of your builds the other day where you were having the sections built. We're getting into that business. So that's awesome. For another conversation. But Jake, I can't thank you enough. If people, I'm going to buy a bunch of books and give it to all my coaching clients, and I'm going to recommend it to everybody because I know it's going to be great. But I want to ask you a question before you tell everybody where they can get it. Did you ever think you'd be an author? And how does that feel? Because we're writing a book right now and it's a very surreal feeling. Yeah.
So it started actually about a year ago. I was in Aspen, hanging out with Tucker Max. And we're kind of discussing this. And, I guess I had a little bit of a seed like that. I had a few people that I knew that had written books. And part of it was getting into a group, of people that are out crushing it on bigger levels than even I was. And I'd say half of them, oh yeah, I wrote this book, I did that thing. And it wasn't even like an idea before I even got around some of these other people. And I was like, why does everyone have books?
It's kind of like the podcast thing now. Everybody has a podcast.
Why? And I was like, do I need a book? It's kind of like, and maybe that's the peer pressure. You're the average of the 5 people that you're around. And so as more and more people, they're like, dude, yeah, the book kind of definitely helped. And so for my year is I theme each of my years as far as where my intentionality and what I'm focusing on for this year. So for this year's growth, and it was specifically looking on building some of my own internal IP, creating this thing. And so it's how can I level up, myself, but how, what happens is it allows me to add more value to my business partners. It allows me to add, we can fund deals faster. More people that become aware of who I am and what we do and the way that we think, and finding those people that I like the way that they think. And I'm going to say, I'm not for everyone. I am, some people be like, he dives in too deep, talks too weird, part of thing. That's fine. There's 7 billion people on planet Earth. I'm not trying to speak to everyone. I am for those that believe in what we kind of do. So as far as to be an author was a little bit surreal, because I also, in the last 9 months, kind of working through and finishing up that process, is I feel like there's so many of those things in my life that just by showing up got done. Mm-hmm. And I just showed up. I just put it in my calendar. I just put in some of that time, and I kind of blinked and it was over. Maybe I didn't experience, maybe I didn't, fully get into that. I know some people say as an author, they get too much caught up in, is it going to be good? They start out to the thing and imposter. And I was like, I don't know, maybe I didn't give it enough time to revel in that, or to marinate into my own insecurities as a person, because I was so busy doing other things that it was just a carve out of a time. And then you look up and you're like, oh, this is done? Oh, wow. I did that? How'd that happen? And that's the surreal nature of it, is it feels. And then I'm kind of I was reading it to my wife, and she's like, sounds like what you jabbering on all the time. She's like, I tone out most of what you say. And I'm
the hardest critic. Yeah. So sounds great. I'm sure dude, I love it. I couldn't agree more. I was listening to Tim Ferriss and Jerry Seinfeld interview, and that's what Jerry said. He suggested to every young writer, just schedule it. And then you wake up one day and it's done. And you don't make it this whole to-do thing. And that's the way we're doing it. Every Friday we meet for an hour with a ghostwriter, and I will wake up in 3 months and it'll be done. And my thing is, I have a hack, because I can't write for crap, is I just talk to the Zoom, and then it transcribes it, and there you go. So there's my thing. So if people want to, where are they going to be able to find the book? Anywhere? Is there a website? How would they do that?
Yeah. So catchknives.com. It's going to be Amazon, Goodreads, couple different places that it's going to be out there as well. But I would say Amazon's probably where most people buy books now. I don't know that anybody actually goes to bookstores anymore. I don't even know if bookstores still exist.
No, we're not sure.
Yeah, but it'll be out there. And obviously that Catch Knives, what we're also going to do is the people that kind of go through there, they'll also get an opportunity to kind of get some of that masterclass as far as be in and aware as that launches a little bit later. I think that's May that's coming out. And so those that, go through there will get, kind of exclusive access. And I know that our book launch team is putting together a few things for those that kind of come through that versus, Amazon, which I'm thankful, however people find their path to this book and the opportunity. But, we can give away a little bit more exclusive stuff. We're going to be able to queue up some more kind of calls, have some people that have some questions. And I think we're working on some cool kind of swag kind of things as well around the Catching Knives theme. So excited to put that out into the world. And like I said, this year for me is growth. And how do I put myself out there a little bit more, give back to other people, let people know what's going on. And this is the start of that process.
I love it. Guys, if you like this episode, make sure you send it out to your friends, and we'll see you next time.
Thank you for listening to Construct Your Life with Austin Linney. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to start constructing your life by taking immediate action on what you learned. For show notes, resources, and more information on one-on-one coaching with Austin, visit constructyourlifepodcast.com.